Hey everybody, it's Paul here from Better Call Paul. Just doing a quick video tonight. It's been just over 3 months since I started the channel, and in my first few videos, I touched on some pretty sensitive topics, discussing why some growth investors believe covered call income investing is not valid, and those two videos were quite popular. One of them I did on July 21st was my third video, was titled Why You Shouldn't Buy Covered Call ETFs, but I Still Am. And the second one was July 27th, which was my 11th video, titled Covered Call ETFs Pay My Bills, and I'm up 85%. Again, a pretty popular video. Some of the things that I discussed in those videos, reasons why people believe you shouldn't use covered call ETFs, had to do with tax inefficiency, that there's no need for yield. In other words, why are you taking a dividend, when you're building your portfolio, when you can just have the fund manager reinvest it and let your portfolio grow? Somebody made a comment about dividends might pay your bills, as if that's a bad thing. Also, ROC seems to be a very hot topic. People talk a lot about ROC, return of capital, and whether it's good or bad. And to be fair, it's both good and bad, because there's two types of ROC. You can have good ROC, where it's more of an accounting process, and bad ROC, when a fund is actually paying you back your capital, and that's where you see NAV erosion. Another common concern is the capped upside. But as I discussed in those videos, as income investors, we understand that there is a capped upside, and we're willing to give up that capped upside in order to have the money now and be able to do what we want with it, whether that's spending it or reinvesting it. And the other thing was fees. Fees, obviously, these companies are managing our money, and there's a cost to that. And it's not necessarily as passively managed as just an index fund would be. If you had, say, for example, VFE investing in the S&P 500, and then there's very minimal fees. But again, we are accepting these fees in order to get that income, right? We want the income now. So I wanted to just take a look at a couple of things and show you some evidence of why 3 months later, and after three videos from Ben Felix talking about why covered call ETFs are not the route to go and nobody should use them, why I'm still using them, and I feel as though I'm seeing a lot of success. All right, guys, in this chart here I've shown before, you can see that I track all of my dividends. I track them by month, obviously. I track them per account that I have, whether it's in my TFSA or my RSP or personal accounts. And then I total it up, right? So if you go back to January, right, I was making 75.92. And then you can see it kind of stuck in the sevens until May, when I hit 9,700. June was 92. And then July, when I started my YouTube channel, I made 9,700 again. So where are we now? You would think that after 3 months of covered calls, eroding my portfolio, NAV erosion, distribution cuts, that obviously my income is going down, and eventually I won't be able to live off my portfolio anymore. But to the contrary, August was my best month ever, where I hit $10,820 in income. And then September, I was able to break $10,000 again. And now here we are in October, and I've completely smashed my all-time high, and I'm at $11,732 with one more day to go. Friday, I get paid from Yield Max, Defiance, and I think that's it. But I'm pretty sure I'm going to be able to make it to $12,000, which is, quite a bit more. I'm already $2,000 ahead of where I was in July, and that's just in 3 months. And I think I'm gonna break the $12,000 mark. You can see here, this is my Wealth Simple portfolio. Back in July, I mentioned that covered call ETFs were paying my bills and that my portfolio was up 85%. So now, with all the issues with covered call ETFs, and how they cause drag on your portfolio and NAV erosion and all those nasty things. I'm now up 103%. So I jumped from 85% to 103%. So again, I said I was happy with being up 85% and being able to use my portfolio to help pay some of my bills. Now I'm not working full time anymore. I lost my job September 1st, so I'm actually withdrawing more money out of my portfolio than I ever have. All right, guys, so let's take a look at my stock events portfolio. You can see here that it's calculating my annual dividends at 137,337. Now, guys, keep in mind, I like to be open and honest. And when I finished working in September, my job was only paying me about 60,000 a year. So I was living off less than half of what this portfolio is currently paying me. So I don't have a lot of concerns about not being able to fund my retirement from this portfolio. If you take a look, you can see that right now it's calculating I should make about 11,444 monthly, yield 32%, yield on cost just over 31%. Keep in mind that this fluctuates almost on a daily basis because all of the weekly pairs, the dividends fluctuate, right? From week to week, YMAX, Alti, YPay, blocks, YBTC, etc. Their dividends fluctuate. So this can definitely go down and it can go up. I think I've seen it. The highest was a little over 140,000. Then it dropped back down to about 132, leveled off around 135, and now it's sitting at 137. So anywhere in that range is fine for me, and hopefully over time it will continue to rise. If you are interested in stock events, they do have a free version. I have the paid version. I don't have an affiliate link or anything like that for it, but it's easy to find and sign up. You can also click on the For You button, and it will show you what you're going to get paid. Excuse me, what you're going to get paid tomorrow. So you can see tomorrow I'm going to get paid from QQQY, WDTE, Roundhill, QDTE, RDTE, and then the single stocks from YieldMax. I still have AMZ, Coney, Misty, NVIDIA, and Tesla. So guys, just to wrap things up, in the past 3 months, my portfolio has done so well, despite myself making a few little mistakes where I was trying to tweak my portfolio one way or the other. I sold off some ETFs like PLTE and NVHE, not entirely, but I sold off some of my position to realize some gains and to put more money into MSTE. As we all know, MSTE has tanked quite heavily and has reduced their distribution, although it's still my number one pair. So you can see that as long as you're diversified, right, you spread out your portfolio. I have over 40 positions. You keep reinvesting a portion of your income. Your portfolio should grow in size. Your distribution should grow. Your monthly income should grow. And I believe that I will be able to weather the storm that we all think is coming, right? Whether it's a bear market or a correction or recession, whatever it's going to be. Everybody's going to see their portfolio drop. And, I'm trying to mitigate some of my risks. I am adding to my utility position, to my Canadian stock position. And I think I'm going to try and sell out most of my YieldMax single stock ETFs. So I am trying to prepare for it, just to be a little bit on the safe side. But at the same time, I'm not going to sell my whole portfolio and wait for a correction. I'm going to keep pulling in that monthly income. Now the trick's going to be is to try and break $11,000 again in November and December, because I like to do it consecutively for about 3 months, and then that's where it seems to be the new standard for my portfolio, anyways. So guys, remember, none of this is financial advice. I'm not trying to sway you one way or the other. I believe very strongly in growth investing as well. I recommend a lot of people, younger people, to buy, your XEQTs, your VFVs. I like FEQT as well. And I know if you speak to growth investors, they could probably give you dozens of options. So do your own research. Make sure you know what you're buying and why you're buying it. And if nothing else, please don't panic, okay? Some of the biggest mistakes I made was panicking, and you got to learn how to stomach the storms. You know, the market goes up and down, right? And a lot of times it's a buying opportunity, especially in today's political environment. You know, where depending on what's being said, the market seems to either skyrocket or drop. So take advantage of that if you can, and just keep investing, stay invested, and I hope everybody's doing well. So until tomorrow, bye for now.